Let's get to Bob Pisani this morning. Hey, Bob.
Yeah, we were up fractionally on the S&P. We're flattish now, but the fact is the S&P is up 1.4% to start the year. That is not bad and better than a lot of people predicted. The sentiment is very bearish right now, and the sectors that were laggards last year are tending to do a little bit better this year. Not right across the board, but so, for example, look at the sectors here. Consumer discretionary is tending to do a little bit better. Technology doing a little bit better. They were big laggards last year. Energy is also continuing to perform well. That was a big winner. Healthcare, which was a comparative winner last year, is lagging a little bit this year. So it's not perfect, but you know, the inverse usually works here. Take a look at where we're at. There's a lot of traders who don't want to believe the Fed, frankly, and there's a lot of potential conflict in the first half of 2023 because their soft landing is starting to gain some adherents. That's lower rates, lower dollar, and moderating wage growth. That's sort of the soft landing here. But then you have people like Bostic yesterday saying we're going to raise rates above 5% and stay there for a long time. You almost expect them to come out and say until hell freezes over because they really want to get this point across. We're not going anywhere for a long, long time. The market doesn't seem to want to believe that. They seem to want to believe that the Fed is using stale or old data. This is an accusation Jeremy Siegel has been making for a while on the housing side of things, and that eventually, sometime down the road, the Fed's going to blink. So we'll see. The waiting game is Thursday for the CPI right now. If that's benign, we'll probably get another move up in the market. In the meantime, Jim mentioned it's hard to find the leadership, a little bit of wandering around in the wilderness. So the recent market leaders here, the cruise lines did very well. They're down today. Boeing's had a good start to the year. It's down today. Alphabet was $90 yesterday. In the middle of the day, it was $90. I was doing something on that. And look, it's just back down here. $3 or $4. So hard to get leadership in, but there is some general patterns here. So the comparative gainers of 2022, they're tending to be the comparative laggards of 2023. So there's Pfizer, comparative outperformer. Chevron was a big outperformer. It's down this year. Johnson & Johnson, Merck, Exxon, these were all big leaders last year. They tend to be trading to the downside. And stuff that was the other way around, the comparative laggards of 2022 are the gainers of 2023. You see NVIDIA, Meta, terrible 2022, Amazon, terrible 2022, all trading to the upside. So when people are a little confused, they turn to the old saws. And like I said, the S&P is up 1.4%. A couple of the old saws are working. That Santa Claus rally, it's the last 5 days of the old year, first two, that was positive. All right, that's a good sign. Then we had the first 5 days barometer. When the first 5 days are up, January and the rest of the year tend to be up. That was positive. That concluded yesterday, up 1.4%. Now we get the January barometer. That's as goes January, so goes the year. We don't have that one yet, but 2 out of 3 ain't bad. Carl, back to you.